Alright, so what's good YouTube? It's your boy FOREX and I'm back with another video. As you can see by the title, uh, I'm gonna be basically talking about market structure and how to read market structure, so you guys can get a better understanding of how to like go with a trend. And I'm really tired, so if I look tired, it's because I am tired. But we're not gonna make no excuses. We're just gonna do what we gotta do. So that's no issue though. But yeah, I just wanted to make this video because like it was something that when I was starting with trading myself, it was something that I struggled with. It was something that it was the first thing I knew that I had to understand. So I really spent a lot of time in trying to understand market structure. So I'm at a point where I understand it very good, and I just want to like help some persons because I know persons are going to be searching up about this stuff too. So I just want to help persons out, and I hope I really explain this as good as possible because I've never really done a video like this before. So let me just go ahead and get into this, bro. So first question, you gotta really ask like, why is market structure important? It's important because like you need to know what what's the trend in the market. You need to know where the market is going because that's how you're gonna make your money. You need to be following the trend. They always say it. You have to be following the trend, which is 100% true. So you want to be going with the trend at all times, right? So it's very important to understand where the trend is going. That significantly improved my win rate. When I started understanding market structure, I saw a drastic increase in my win rate. So I knew it's very vital. So if you want to become a trader, if you're pursuing it, I advise that you watch the whole video. But it's really important because you need to know the direction of the market, like point blank. Like you just need to know the direction. So it's very, very important. So I'm just gonna go ahead and start explaining it. So you got the three things can be happening, right? I'm gonna be explaining two. So you got an uptrend, you got a downtrend, and you got ranges. I'm gonna leave ranges for another video, but for this video, it's gonna be all about trends. It's gonna be an uptrend and downtrend because that's when you want to enter the market. When the market is aggressively going up and when it's aggressively going down. You get what I'm saying? So, yeah. So in this particular example that I have right here, or at this particular time, if you know anything about trading, then you automatically realize that this is a clear downtrend, right? And why is it a downtrend? Is because it's breaking lows. It's breaking lower lows, and it's making lower lows and it's making higher highs. And if you guys don't really understand like what lower lows and what higher highs is, um, a lower low. So you have lower lows and you have lower highs. These things occur when the market is in a downtrend. So when you're looking at the market, and if you look and you see that the market is in a downtrend, um, you're looking for lower lows and lower highs, right? It's not something that you're gonna try to say, oh, well, you want the market to be in a downtrend or you want it to be in an uptrend. That's not you're just reacting off what the market is doing. So whatever it is doing, that's what you're following. So you need to know what the market is doing at every given moment. You want to know if it's in a range, or you want to know if it's in an uptrend or a downtrend. But in this case right here, it's in a downtrend. As I said before, it's in a downtrend because it's making lower lows, right? So whenever you have a swing, and I'm going to show you what a swing is. This is a swing. You see how the market come down right here? Let me see if I can change the color of that real quick so it could be a little bit better. Yeah, so you see how the market came right here, then it stopped, came back, it went there, and then it reversed, it continued going down here, and then it had a little pullback right here, then it reversed again, and it ended up breaking that low, made another pullback, then it ended up breaking the low again. So it's a downtrend, or we have lower lows and lower highs because this right here, let me go ahead and show you what I'm talking about. This right here, you see this little point, this little swing right here, it's called a lower low because it's breaking low and it is lower than the previous low. This right here, this low right here that I got my mouse on, it's the previous low, right? And this low that my cursor is on broke it. So it is called a lower low because it is lower than the previous low. When the market make lower lows, it is expected to make a lower high. So as you can see right here, it made a lower low, and then it made a lower high, which is what it was expected to do, is to make a lower high. And what is a lower high? A lower high is something that lower high is basically a swing or a high that is lower than the most recent high. And before this high right here, or before this swing that you see I got my cursor on, what was the most recent high before that? It is this right here. This right here. This high, this swing right here that you see my cursor on. And I need you guys to follow because it's my first time doing this and I don't really know how to like utilize the software or trading view is so good to give examples or to be teaching, so I'm trying my best, but I need you guys to follow. So you see this most recent high. Let me see if I can make what I'm talking about really clearly. I don't really know the tools in this stuff, that's why, bro, but I'm gonna try. So you see this high right here? Yes, that thing that I got that box is around, that is the most recent I have after this high right here. Before, I mean, it's the most recent high before this high right here. So as I mentioned to you, it made a lower low because it broke the most recent low. And when the market makes a lower low, it is expected to make a lower high, which is what it did. And when it makes a lower high, you can say to yourself, okay, it's a lower high. It is expected to make a lower low, which is what it did right here again. So those are the things that you want to look for to tell yourself or to determine the trend that the market is going in. You get what I'm saying? No, this is for downtrends, right? And this is what it is typically supposed to look like, a downtrend. If I'm just using like a little diagram or a little write up to really demonstrate, a downtrend should look like this: boom, boom, boom. Alright, let me make the not a swing. Boom. So you got lower low. Alright, give me 1 second. Give me 1 second. Let me make it a little bit higher. So we got a lower high and a lower. So we got a high, right? And that high was not broken, so you can see price didn't go above it. So it is this right here, the high that was made after this high was not successful in breaking the high, if you get what I'm saying. So it's a lower high, right? After it made a lower high, it did what I said, or what I was explaining that it normally does. It made a lower low. It broke this low. So that's the way downtrend is supposed to look. You need to understand what low and what lower highs is. Now I'm gonna try to find an uptrend, right? Because it's pretty much the same thing. So damn, we should have been on an uptrend for so long. 1 second, let me try to find one. Okay, so right here, I'm gonna work it right here. I hope you can see my little cursor. Or let me just make. I'm gonna be working at this section right here. Everything is in this. So from right here, from down here to up there, that's when I'm gonna be giving my example. All right. So, all right. So as you can see in this little diagram or in this price action that I'm about to show you, we have a small uptrend. It's not a very long uptrend, it's a very small one, okay? Now in an uptrend, the market is expected to make higher highs and higher lows, okay? Now right here, at this point right here, Boom, boom. At that point right there, okay, pull back right here, then continue going up after that. Okay, so in this case, as you can see, as I mentioned to you, in uptrends, the market is expected to make higher highs and higher lows. These in an uptrend, the market is expected to make higher highs and higher lows. If you look closely, and you zoom up a little bit more, you can see that the market uh, had an equal low. This low where my cursors is, that's a low, and this one right here is a low. It's an equal low, right? Then the market pushed up. It broke this high right here. Let me show you what high I'm talking about. We don't want persons to be losing track of what I'm saying. So this high, that's a high. This little thing right here, yes it is. So let me show you why it's a high. Let me do that again. I want to put it in a line. Okay. No, I shouldn't have done that. It looks worse. Alright. So, right now, as you can see, at this two lows right here, when price reverse this little support, price reversed and it broke this high. Where you see that little arrow that's going across, that's called an eye, right? The market broke that high, and when the market is making higher highs, because this is a higher high, it's breaking a high. That means it's creating a higher high. Whenever a high is broken, another high is going to be created, right? And as you can see right here, that's exactly what it did. It broke this high, and then it reversed, right? And it failed to broke this low. Now that's a good confirmation that price really want to go up, because it made a higher low. It's a higher low because it is higher than this low right here. You see this low? It's higher than that, so it's called a higher low. And when the market creates a higher low, it is expected to make another higher high. As you can see, it reversed and it broke this high right here. Let me go ahead and show you what that is again. That was another high right there. And as you can see, market broke it. And when price makes a higher high, it is expected to make another higher low, which is what we have right here. It's a low, but it is higher than the most previous low, which is this here. So as a result, it is called a higher low, and it continued its uptrend by creating another higher high, which is what you can see right here. The market broke the most previous high, which is this right here. That was a high, and the market broke it, creating another higher high and another higher low. As you can see, this low is higher than this low, and another higher high, so and so until the market structure change. All right. Now I'm gonna show you how you can determine, or how you can know when the market structure is about to be changed. Now, as I said to you, the market is going up, it's going to make higher highs and higher lows, and if it's going down, it's going to make lower lows and lower highs. All right. Now, let's say, all right, boom, the market did make a higher high, right? It made a higher. Don't tell me it lost where I was, bro. Why is trading just going on, bro? God, bro, trading view is so freaking annoying, man. Alright. I'm gonna go ahead and check that for another guess. Because the trading view is tripping, bro. Like, okay, how you can know when the market direction is about to change? Okay, so in this little small trend, it's not a huge trend. I hope you can identify that this is a trend because it's making higher highs and higher lows. This high is higher than this high. This low is higher than this low, so it's a higher high. It's an uptrend. So because it has higher highs and higher lows. Now, buyer right In this little reversal right here, the market was expected to make another higher low. Let me change the color of that real quick. Which is something that you guys can actually see. Okay. Alright, so that's what it was expected to do. It was expected to make a higher high, and then it was expected to reverse before breaking this low. Alright? But that's not what it did. Actually broke the low. Right? So when you see a in an uptrend where we were making higher highs and higher lows, but all of a sudden it made a lower low, and a lower low was made because it broke the most previous low, which is right here. That's a low. Right? Seeing the fact that okay, we start making lower low, that means the market is starting to change directions. And when the market starts to make a lower low, what is it expected to make? No, a lower high, right? It is expected to make a lower high, and that's what it did right here. As you can see, it made a lower low. As a matter of fact, it took a lot of lows, and that itself really explained that the market is really in a really hard downtrend. So it made a lower low, which is this low right here. I don't know if you can see it, but that's a low because it broke all these lows, and it is expected to make a lower high. And the lower high was made right here. It did not break the most previous high, which is right here. It did not do that. It failed to do that. As a result, it made a lower high, right? And when it makes a lower high, it is expected to make a lower low, and well, it didn't make a lower low right here. That's what I'm trying. I was trying to get a good example, bro. But all right, so look at this one right here better. So right here, well, no, that's not one here. I mean, god damn, bro. I can't find an example, bro. I'm just trying to find where. Okay. All right, you got one right here. Okay, there you go. Okay, so if you look right here in this little section right here. Okay, well, that little section right there. Make sure to draw a little box around it so y'all know what I'm talking about right here. Alright, so in this little part right here where the market was making higher highs and higher lows, if you look closely, you saw that the market direction changed right here where this high, after this high, this low was taken out. The most previous low was taken out. As a result, or when you see that a low is taken out after a uptrend, um, when the market structure starts to make, or when the market starts making lower lows, it is now expected to make a lower high, which is this high right here. You might not be able to see so clearly, but it is an high. If I go on the line chart, you'll be able to see clearly. It's a high, right? You can see there's a swing. So it made a lower high, and as I said, when the market makes a lower high, it is now expected to make a lower low, and then another lower high, then another lower low, another lower high, another lower low, until one of the eyes are taken out. All right. So explain or explain what market structures is what market structure actually is. And I hope I was able to provide some kind of clarity for someone who's trying to learn about market structure, because as I said, it's very important. Right. So I really hope that I actually helped somebody in this video, because the whole purpose was to actually help someone, right? So I really hope I actually did. And if I did, please leave a like, comment down below, explain what I could have probably done better. And I think that's pretty much it for the video, bro. You know what I'm saying? I was just trying to, as I said, was just trying to help someone. I don't know how to make these videos, but I do want to start making these videos, because I do believe that these videos would really be very important to some persons, because when I was starting my journey, these were things that I was searching up every single day. So if I can give back to the community, the Forex community, just to help somebody understand something that's going to help them better, better their journey in Forex, most definitely glad to do those kind of things. But that's pretty much it for the video, bro. Please leave a like, subscribe, comment, and just leave some comments. Let me know, as I said, what can I do right, or what can I do better, or whatever. What I'm saying, man, just need some support. You know what I'm saying? But that's pretty much it for the video. Have yourself a great day.